Hi everybody, my name is Luis Jesus Duran and this is one of my first videos totally in English. This is my way to practice my English by sharing information regarding not only to business or communication but global economy. You guys know that we are having some hard times in terms of economy. You know, the war in Europe affect all the world, and a topic which is very important for us is this thing regarding to the parity between dollar and euro. And I want to share with you an article and that was published on Washington Post regarding to this important topic. Euro is equal to the dollar. Here's why it matters. So I'm gonna read it for you to know, for you to understand why this topic is really important for the global economy and for the European and American economy. Okay, so let's begin with this article. The euro and the US dollar are exchanging at a 1-to-1 rate for the first time in nearly 2 decades. When the European currency was in its infancy, the euro has been losing ground against the dollar since the start of the year, when it hovered near 1.13 amid an aggressive inflation fighting campaign by the US Federal Reserve, along with broader global disruption set off by the Russian invasion of Ukraine. They reached parity on Wednesday morning, according to Bloomberg data. The stronger dollar is good news for Americans considering a European vacation or buying goods abroad. It could lower the price of commodities such as grain and potentially ease the relentless inflation that has sent household and business expenses surging. But experts say the euro's retreat also hints at the slower pace of global trade, adding to recession worries. Okay, recession is not only a worry, I think that recession is, in fact, a reality. And recession will affect not only Europe, but the US, and obviously the rest of the economies that are part of this big, massive economy around the world. And Peru, which is my country, is part of that. So in many ways, we are going to feel that, that problem, the problem of the recession, the global recession. But here are some ways this could affect consumer businesses and travelers. So let's talk a little bit about it. Why is the euro falling against the dollar? It's a mix of factors, chief among them the war in Ukraine. The conflict upended food supplies and set energy prices soaring around the world, particularly impacting the European Union when many countries have relied heavily on Russian fossil fuel imports. Okay, that was a problem. As part of a pressure campaign against its eastern neighbor, the 27-nation European Union moved to wean itself of Russian oil, while Moscow sharply reduced gas flows that raised costs for Europeans already reeling from the pandemic. In the United States, the Fed has been aggressively raising interest rates, pushing yields on Treasury bonds higher and making the greenback more attractive to investors than the euro. America's central bank has raised rates 3 times in 2022 and has signaled that it has 4 more increases planned as part of its strategy to bring inflation under control. The European Central Bank also is expected to raise rates to bring inflation back to a 2% target, but at a slower pace than the United States. It has penciled in a 0.25 percentage point rate hike for July, while the Fed is widely expected go with 0.75 percentage point, just as it did in June. The dollar is considered a safe haven, and it has gained strength as investors maneuver an uncertain economic playing field in Europe and elsewhere. We expect the dollar to continue to benefit from its status as a safe haven for international investors and commercial interests, particularly considering the more precarious position of Europe's economy. RSM chief economist Joe Brusuelas wrote in late April as the dollar gained value. So let's see. What does parity mean for the euro? What does it mean for the rest of the global economy? Despite concerns, some analysts describe the euro-dollar parity as a psychological milestone that would not necessarily be a turning point for the currency, which already was well off its 2008 peak near $1.60. Still, it is worth expecting that Europe will no longer get away with soft market reassurances and modest reactions. So the pressure on the single currency may persist for the foreseeable future, said Alex Kupcikevich, senior manager analyst at foreign currency trader XPro. Okay. He noted that central banks and policymakers on the continent will be forced to respond to depreciation worries. The psychological impact is clearly important, and investors are going to be very focused on the market flows and liquidity, according to an analysis from Deutsche Bank Research, which said Tuesday it did not anticipate an unusual risk profile due to the parity. So, what does this mean for businesses and consumers? I think that it's a good news for people in the United States, just because whenever they want to travel around the globe, the dollar is a very strong currency right now. So everything is going to be cheaper. So perhaps this is the good news at the end of the day regarding to the dollar. Shifting global currencies can have a profound effect on businesses that sell their products abroad or rely on foreign raw materials to make them. It also can play into the price of commodities such as grain to have a straight line to consumers. European businesses that sell their wares abroad might find the weaker currency makes their export more appealing because the buyer's currency will be more valuable by comparison. But any gains to export could be offset by raising inflation in the 19 countries that use the euro, meaning any imported goods or raw materials will become more expensive. The shifting exchange rates could create winners and losers depending on the mix of imports and exports. Some experts interpret the weaker currency as a sign of slower economic growth for Europe. With the euro's decline, it's becoming increasingly clear that the eurozone is heading into recession, even as financial conditions have tightened more than in the US or Japan. Robin Brooke, chief economic at the Institute of International Finance, said in a tweet. In the United States, a strengthening dollar presents a different set of problems and opportunities. It could hurt American exports abroad, because buyers purchasing power is weakened. It also will affect currency translations on repatriated profits for U.S. multinationals. Comerica Wealth Management Chief Investment Officer John Leach said in a note Tuesday, commodities such as grain and industrial-grade metals have become more expensive recently, but a stronger dollar could help contain prices, said Jay Hatfield, Chief Executive at Infrastructure Capital Management. The strong dollar drives the prices of global commodities lower, as most commodities are priced in dollars, Hatfield said Tuesday in a note. We anticipate that inflation will start dropping substantially in the fall as commodity prices are reflected in price indices. So this is important. This part is interesting because there are many people around the globe and in the United States that wanna travel. They enjoy traveling, and let's see how it affects their travel plans in the near future. It will become more expensive for Europeans and people who earn their wages in euros to travel abroad and spend in US dollars. For Americans who see Europe as a popular travel destination, the near 1-to-1 ratio means they will not only have an easier time deciphering prices, but also greater expensive power when visiting such Eurozone destinations as France, Germany, Spain, Italy, and Greece. And let's see that it's going to be extremely cheap if you come to Peru, because comparing dollars to soles, which is our national currency, it's going to be very cheap to get goods, to buy tickets, to go to Machu Picchu. The currency dynamics could benefit Americans traveling outside the Eurozone too. The US dollar is also up against the Mexican peso, the Canadian and Australian dollars, and the South Korean won over the last months. So, this is what we are having in terms of what is happening regarding to the euro and the dollar, the parity between these two currencies, and how could affect us as consumers, and not only as consumers, but in general as companies, organizations, and global economy in general. So, well, this is what I have in terms of the global economy and the parity between euro and dollar.